Now we start in South Africa. The country risks another ratings downgrade if it takes up a recommendation to amend the role of the country's Reserve Bank. Of course, ratings agency Standard & Poor's downgraded South Africa to junk in April. It's warned that this could be cut even further if the independence of the central bank is compromised. South Africa's anti-graft watchdog wants ABSA to repay a loan dating back 25 years. Busisiwe Mkhwebane is also recommending that Parliament adjust the constitution to change the mandate of the central bank to move away from protecting the value of the currency to concentrate on growth. Now, this would mean a move away from inflation targeting and low interest rates.
If you look around the world, there are many examples in history where there was no adherence to inflation targeting, and for various reasons, inflation became uncontrollable. Certainly close to home, Zimbabwe went through a huge economic crisis, and at some point the inflation was many thousand%. You've seen the same thing in parts of South America, and having inflation get up to those types of level really undermines the stability in any country. It undermines your ability to be competitive, undermines your ability to attract investment. It undermines confidence, both consumer and business confidence. So there's a lot of ramifications.
It could be potentially dangerous, but fortunately there appear to be enough forces at work to prevent the meddling with the constitution of the kind that she's talking about. And what the public protector is trying to insert into the constitution simply confuses the role of the Reserve Bank and of monetary policy, because it won't know where to go. If it's not subject to a certain discipline, it could go haywire, as we've seen in Venezuela, where inflation is now approaching 1,000%. And what the public protector is clearly not cognizant of is that higher inflation is actually more damaging to poor people than to wealthier people. Wealthier people can protect themselves against increased inflation by investing in financial assets whose prices tend to rise in line with higher inflation. But the poor have no such means of protecting themselves against higher inflation.
Well, Sumitra Naidu now joins us in Johannesburg with more on this. Sumitra, as always, welcome to the show. Now, we've seen a lot of resistance so far to the public protector's recommendations, of course, to change the Reserve Bank's mandate. We've seen markets were down on the news. S&P also chimed in on the risks. So what are the chances that we'll see 2/3 of South Africa's parliament vote in favor of her recommendations?
Well, Uche, we're not sure if it would go that far. There's been a massive outcry over these recommendations. The Reserve Bank itself is requesting an urgent review to set aside the remedial action prescribed by the public protector. And we've already seen the fallout on the markets. Ratings agency S&P warning of further downgrades if the government actually considers the recommendations. Having said that, we're not too sure what's motivating such a radical move. Anything could happen. If it does get to Parliament, it is certainly very worrying because the ANC has the seat majority. However, a number of top ANC members have come out to support the independence of the Reserve Bank and is asking the public protector to back down on interfering with this. So I don't think there would be any or enough support for any changes to the bank's mandate if it does get to Parliament. But it does look like every avenue will be followed to keep these recommendations from actually reaching Parliament in the first place.
Now, Sumitra, like you mentioned, the Reserve Bank is challenging this. How do you expect to see this unfold in the coming days?
Well, it's just a day since the public protector announced the remedial action, and we're already seeing the fallout. The South African economy is currently in recession. It's just one notch away from being completely sub-investment grade. In just the last 24 hours, we saw all three of the global ratings agencies coming out with warnings. Moody's warning against the sharp decline in business confidence. We heard Fitch warning on the mining charter that it's too radical. And of course, S&P issued a warning as well on moves to amend the mandate of the Reserve Bank. If this goes ahead, it will downgrade South Africa further. So the economy can't really afford any more setbacks. The currency has lost over 2%. It's back above that 13 Rand level against the dollar. And we're seeing a plethora of information around the consequences of such actions from economists, from legal experts, banking specialists, policymakers. Even a former Reserve Bank has come out really spelling out how dangerous this remedial action that the public protector is recommending would be for the country, more especially the devastating impacts it will have on the poor. Now, trade union COSATU seems to be the lone voice in support of the public protector. It's certainly going to be an interesting few days ahead. I think we're going to see some fierce battles as various quarters try to keep these recommendations from going to Parliament. Uche?
Quite right, Sumitra. Many thanks for those insights. Sumitra Naidu joining us there in Johannesburg. Well,